Good afternoon, everyone. It is, what is it? The 31st of March, and we're ready to roll into the official spring. But before we get there, we have a whole bunch of drama to talk about. And yes, finally, we have the Green Giant. So, for those that have been waiting for the bleeding to stop, it stopped at least for a little while today. Now, in full disclosure, I haven't been at my screens a lot today, so a lot of what I'm seeing is going to be for the first time. So if I'm reacting to something I'm seeing, it's only because I haven't looked at it until now. But let's talk about this Dow chart, because here we are, big move down, and we've talked about the 4 hour entry. That's our on and off ramp to the daily, and then you get confluence, and here, before you know it, you've got a weekly sell signal, as you can see by the white vertical line. But hey, your feet are on the desk and you're relaxing because you are in on the 4 hour or the daily chart. Now, I think this is going to be one of those times when we need to pay particular attention to trend and not necessarily daily price movements. Because if you haven't noticed yet, we live in some very volatile times. And this is no different. So if we take the candles off, although we had a massive green candle today, the Green Giant, have we broken trend yet on this chart? Not yet. So let's just take a deep breath. I think for the some of the options traders, maybe you'll love days like today. But at the end of the day, let's just look at what the chart is telling us in a little more macro sense. So we've taken off our candles, which can cause us tremendous amounts of anxiety one way or the other. Sometimes it's excitement, sometimes it's disappointment and heartbreak. But we obviously have money coming in, and that's what the white indicates when it changes color. We all know that. But let's look at where price may go next. And we believe in fibs, fractals, and filters. So why don't we start with the first one? This is our top up here. So let's just take our top, connect it to the bottom, swing high, swing low. And what are we looking for? We're looking for levels. It's all about levels. And those levels typically appear where money has been before. And we can identify those levels of where money has been before in part by using fibs. So one of the areas we look for is obviously 50% retracement, or extension. That's this level up in here at 47,782. And then you have 618 up at 48,427. And this is the daily. So if we were thinking, hey, are we changing direction? Like, is there something meaningful happening? We really don't know. We can't hang our hat on one single candle, right? You don't create or end a trend in a day. Nice green candle? Absolutely. Do you have relative strength? Absolutely. And you can see it's in this Dow's in the second spot, and it's being compared to the SPY, or the S&P rather. So it's outperforming a little bit, but again, we don't want to base everything we do off one candle. So if we're looking for upside opportunity, we throw this fib on here, take the high, take the low, and start looking for 50% 618. And does that necessarily mean, let's say, for example, we'll use this 50% level, and that's right in here. So if we have this pullback, and then we find our 50% level, and then we start to maybe pull back a bit, does that tell us anything about what might be going on here? Especially if that quote-unquote pulling back a bit turns out to be a leg down. And what this ended up being was just a retracement to the upside, and then the trend down continues. Because nothing goes straight up or straight down. It just doesn't. So I know everyone gets excited when they have, a big green candle, and I have no idea what caused all this stuff today. I don't know if there was news. I have no clue. And to me, it doesn't really matter, right? Because I'm indifferent to price. I don't care if it goes up. I don't care if it goes down. It makes no difference to me. So days like today are not hair-raising or anything like that. It's, just another Tuesday. So let's just take, for example, the weekly. And our fibs are probably going to stay on this chart. This gives you a better idea on the weekly of where this level is, that 50% level. And if I go back to the daily just for a second and I start adding a 20, a 50, I'm going to add a 200. Aha. So what does this tell us? If we want to get to the 50% level, we got to get through here, right? What is this? This is the 200 MA and this is the 20 MA. Is this going to be a first touch of the 20? Yes. And those first touches have a higher probability of failing. To complicate matters a little bit more, you also have the 200 in here, which is just another layer of resistance. So in order to challenge 50%, in order to challenge 618, this is what you have to deal with. And when I just pull this back a little bit, breaking the 200 is never a good thing. So here we've broken it. I'm going to be really interested to see over the next few days how this plays out. Let's make an assumption that we work our way through this level. Again, we don't expect it to always happen in one candle. It can be a matter of days or weeks sometimes before you break through or fail. But just don't expect it to be a rocket ship through all the time. But let's pretend for a moment that we do break through. Your next level is the 50. Right? That's the ice. You don't want to break the ice. Break the ice, fall through. It's really hard to get your head on the other side of it. And that's the concern here. And when you test and fail the 50 for the first time, those are actually meaningful. You break through the 50, hey, maybe you're going places. But if you fail it, you're going to come right back down to the 200 or the 20 again. It's just a little game of ping pong between levels. That's all it is, right? It's just current price again looking for past price. That's all. And if we can increase the probability of in this case having price go up, it's nice to do it when you have relative strength. What we don't have here is a buy signal yet. Even with being up 1100 on the Dow, it wasn't enough to pull that short-term average through the T line, which is one of the parameters that's going to trigger a buy signal. Didn't even do that. So it's got a ways to go before it's going to be able to print one. I'm really interested when they appear, like a buy signal, for example, as you break that zero level on the Z-scored dashboard. Those ones usually are meaningful. So we have this pop in relative strength today, but I don't know what it means yet. I don't think anybody really does. Right? The market is reacting to everything it hears, sees, smells, and steps in. So I think all we do is what? Follow the chart, right? We're just following a trend. When the trend's broken, if this turns into a buy signal and price starts to run, well then, okay. I guess we can be long, right? We don't want to be long until we're trading on the north side of this level with confirmation. At least that's me. Right? I know everyone's different. We all manage risk differently. But I prefer, it's not about catching the bottom. There's not going to be a sticker or a happy face on your fridge when you get home because you bought down here. The world doesn't know. The world doesn't care. Focus on being safe first. Right? So I am not interested in longing yet until I, at the very minimum, get a confirmation that price wants to go in the direction that that I think will trend. And again, let's go back to the 4 hour, because the 4 hour is that on and off ramp onto the daily. This could be Bitcoin, and we'll get there too. We finally break the 20 MA. Finally. But this is not out of the woods yet. It still has to deal with the 50 on the 4 hour. It still has to deal with the 200. And these are, more than reasonable lengths of time, right? But on the positive side, we break one level and we are looking for the next level. So here you finally on the 4 hour produced a buy signal today. The 50 would be my target. And if you look to the left, you can see the trading that took place in this level in here. So again, what you're seeing is just current price looking for that past price. However you want to identify it is up to you. If you want to use major moving averages as a starting place, that's great. If you prefer to look, condense your chart, look for liquidity levels, fair value gaps, whatever you want to identify them as, that's okay. As long as you have a methodology that works. That's all we really care about, right? We can mitigate risk and we have something that produces results. We don't get in the weeds about how we got there. So here's our 4 hour. We're looking for the 50. If we break that, you head to the 200. But is it the first attempt? Yeah. So you have that susceptibility to failure on the first attempt. Did it break through the 20 on the first attempt? No. So it's just test, fail, test, fail, test until it doesn't fail anymore. Now, if you're time frame jumping, it's going to be very difficult even in a calm market. It's going to be very difficult to get a real good grasp on what price is doing, because you're jumping around and looking at so many different time frames, trying to rationalize what you're seeing every time you're doing it. And just to kind of give an example, maybe we will go to Bitcoin now. And yesterday in my Telegram group, I took the daily and I just kind of pointed out like where the T line was on the daily chart and some other levels. The 50 was another one. And I did that and then we went to the 15 minute. And then when you see them on the 15 minute, and vice versa, all of a sudden they mean something different. So what was happening is that what you would see is that daily T line. Let's just mark it because unfortunately I took the things off. Let's see around it here. Go to the 15. So there's our daily T line on the 15-minute chart. Now, what do we know about the daily T line? We have to get above it as one of the minimum requirements to start moving the other way. We know that when we're on the north side of the T line, which is that little yellow line there, we're bullish. And we're on the south side of it, not so much. So although you can see the volatility in here, but still it's just giving us the technical moves with a little bit of juice on them. So we know that that's the T line on the daily. And we're kind of using that as a benchmark. Because as you can see, it has provided some resistance. There's the 1 hour. This is why we use fractals, so that we can see on different time frames what our support and resistance may be. And in this case here, we are using the T line as a benchmark, because I would be, if I'm long, I want to see price trade above that level. If I'm short, I want to make sure I keep beneath it, because that'll then will tell me on the daily that I'm still bearish. So here we are on the 1 hour, taking a fractal look, and is the 200 MA a problem for price a little bit, acting as resistance? Yeah. So in other words, it's still struggling with that T-line level. Let's go to the 4 hour. That's the chart we used for the on and off ramp. What do we see on the 4 hour? Our friend the 50. Right, as our resistance. And look, you can see price respect. It's not pin the tail on the donkey, but you can see price respect these levels. Is this a bullish chart? Well, we have a buy signal, but we don't have the relative strength support. Right, and since I've started using relative strength more frequently in my analysis, in a way that I never ever did before, thank you, David Nikoski. Shout out to David again. So what I discovered is that now I won't take this. Right, if there's no relative strength there, it makes me apprehensive. However, over here, I have much more confidence in this signal because I have relative strength support, but these are diverging. Now, was there a trade there? Absolutely. But when you're sticking to a system and a set of rules, they're not just like part-time things, right? When you see something that suits you, oh, it ticked all the boxes, I'll take the trade. Oh, it only ticked 30% of the boxes, but my gut tells me that I think I'm right. No, that's not how it works. Right? So I wouldn't have taken this trade. Even though I got a buy signal, this would have given me reason to pause. Is that the end of the world because I didn't take that trade? No. Why? Because there's probably 4 or 5 other things that I'm charting on a regular basis, and that's it. And there will be something else that I can move on to. Will I catch this when the appropriate time comes? Most likely. Why? Because I'm not looking at 200 tickers. Right? I'm looking at a handful on a regular basis that you know intimately. Someone will ask you, where's price on the 4 hour on XYZ? And you're probably going to know. Like, that's the kind of intimacy with what you're charting. I would suggest you have. That's just an opinion, but I don't think it's a terrible one. So again, I would have probably shied away from this. And seeing the 50 here as resistance would probably, again, give me reason to pause. If we look at the daily, what did we wick today and pull back from? The 50-day moving average. Now, if we've been hanging out, for those of you that have been hanging out in here for a little while, you'll know that wicking, a major moving average or any level of resistance like this, but based on how we interpret the chart, this is significant. This is not really a good thing, right? It's not yet bullish, let's just say that. So on the daily, what has to happen? You got to break through the 50. Is this going to be one of those quote-unquote first touch rejections? Well, we're going to find out. And if it does break through, it's still got to deal with the 20. And if we can be, let's just draw quickly. Let's just draw that level there. And just a trend line, see how that, if it respects it. It may or may not. We're not going to hang our hat on a trend line, but I like to connect that second, this little top here, when I get a chance. So we don't know what comes after this candle, but what are the probabilities? That's all we can deal with, right? So here's your relative strength. Is it positive or negative? It's negative. Do we have tons of resistance above us? Yeah, we got a fair bit. we know what we have to break through, and this could grind right for a while. But on our weekly chart, because, you know, it's so easy to get lost in the thick of thin things. What's changed on this weekly chart? Well, we're forming a bottom, which is fair, right? That's what you're kind of seeing in here. Forming a bottom with support of the 200 beneath you. And again, this is your daily T line, just for reference. So on our weekly chart, however, you can see where we sit in relative strength. Basically at the bottom, because our comparable is IBIT, which is the same thing. So here we are trading where? Below 5 EMA. Sure. A couple weeks ago, 2 weeks ago, you pushed all the way to 75.8. At one time, this was a big green candle, right? Looked like you had 3 in a row. Everyone was excited. And then all of a sudden, that weekly candle starts to turn into something totally different. And at the end of the day, you close well below the 5 EMA and the T line. Following candle, same thing, wick through, close below. Here we are, wicking through. And that would be our current level here. We're not obviously closed yet. We're only a couple days in. But we can see what the resistance levels are. So you're all the way up here at 70. And let's just kind of be honest about when you start to get excited. So there's the weekly T line. Daily, weekly. This in here, which feels like these moves feel huge, right? But really, it's only the difference between the daily and weekly T line. Now, you could take previous week's highs and lows. There's all sorts of ways that you can do that, or what we're trying to do here. I'm just simply using the T line just to show the difference between the daily and weekly chart. So when you start going from, 67.6 to 70, it's, what is it, 3,000 and change? $3,300. It's not $3,400. It's not a ton. It's a lot, but not a lot. It's all relative, obviously. But the point is, although price could move $3,400 within this range, it doesn't mean that you've broken trend. It doesn't. Right now, this is still a bearish chart, even though you have 2 green candles. Right now, this is still a bearish chart. The weeklies will take out the noise. If this just turns out to be a failure, here we are on Tuesday, we can come back here Thursday, and this candle could have taken out these levels, maybe even hit the 200 MA weekly, who knows. But right now, this is still a bearish chart. So I think everybody needs to just take a breath, trade what's in front of you, and don't get wound up by these crazy giant parabolic candles that may or may not mean anything to trend. So, of course, you're happy that you've had a green day, right? Or the market in general's had a green day. I get that, but it's not a trend breaker yet, and we still have a lot of work to do. 20 and 250. So exhale, right? I don't think that one candle is going to change a day. It's not going to change my opinion on a trend. Just like if we look at oil on the daily chart, down over 3%, 3.5% today. Sounds like a lot, but in the grand scheme of things, is it? Isn't this just look like a red candle in what still appears to be an uptrend? I think so. And here's where it all started. This is oil way back, it seems like a million years ago, on the 18th of February. Get your sell signal in since then, trend hasn't broken. But have we had volatility? Hell yes. Lots of volatility. But let's just take out the noise any way we can. Let's just flip off those candles for a minute. I don't mean flip off in a derogatory way. I mean turn them off. So we turn off the candles. You can see you get your buy signal. And if this was all you were looking at, and understanding that you're appropriately risk mitigated with stops and all that fun stuff, but if this was all you were looking at, compared to that, does one make you feel a little more manic than another? Does, doesn't it? So just take the candles off. If you took the signal and you're long, obviously, you're just counting right at this point, right? All of this stuff, and believe me, when I first started doing this, it wasn't easy, right? Because no one likes to walk around in the dark unless they absolutely have to. But if you think of it in the context of, okay, if I take off my candles, does it make me more aware or acutely sensitive to other things if I block out certain noise? Yes, it does. And I think that's what's happening here. So now I can manage this nonsensical price movement because I'm only concerned primarily about the trend. And if something happened where you got stopped out because there was such a massive extreme movement in price, well, that's what happens. That's not a bad thing. But ultimately, just try taking the candles off. If you find yourself getting a little overwhelmed with what price is doing. Because we only care about what price does. We're not concerned about what people say. And you know, if we can be brutally honest, here we are looking at an oil chart. Here's the weekly. In the last several weeks, there has been a lot of talk about a lot of things about oil, obviously. But this chart really, and this is why I love weekly charts, because it takes a lot of the noise out. But if that's your buy signal on your weekly chart in here, this is way easier to look at. Focus on what's actually happening to your account rather than the big parabolic moves in price that happen, you know, on an intermittent weekly basis, daily basis, intraday basis. Right? Just block out the noise. All of this nonsense is people talking, literally. But yet, does price break the T-line? Nope. Right? You wicket, pop, wicket, pop, wicket, pop. You don't break trend. Right? This is just price still being true to our philosophy anyways. Volatile? Absolutely. Even the stupid, ridiculous candle wicks the T-line. Like I say, it's not pin the tail on the donkey, but that's pretty darn close. You know, price range from 76 to basically 120. And it respected almost to the penny that lower level of the T-line. Yes, it's relevant. Now, did a little bit of air get in here? Is the horse too far away from the barn? Like we like it when price rides up consistently and kind of hugs that level. Yeah, there's a lot of air up in here. Would it make sense to kind of suck some of that air out? Sure. Maybe price comes back to the 5 EMA or maybe the T-line again? Sure. If it starts trading below the T-line in a meaningful way, does it put the 200 in play? Sure. Would it be a first touch? Yes. And then it's just over and over and over again. Rewind, play, rewind, play. This is how price behaves. Over and over and over again, any time frame, any asset. And it's not up to us to, do you remember the kid in math class, or maybe you were that kid in math class, that would always ask why? Why? I was the guy sitting at the back of the class going, who gives a crap why? Just get the answer right and move on. That's what this is. Do I know why price does these things? Not necessarily. I believe I have a theory. Fibs, fractals, filters. It's all math. It's a language. But let's just remember something. Each and every week on Friday afternoon, you're trying to prepare yourself for what someone was going to do over the weekend. Just follow the chart. Protect yourself. If you follow the chart and you're in down here, you don't give a crap about all this volatility because you're in the trade early and you're well protected. And if anything drastic happens, you're already in profit. And unfortunately, there's nothing that you can do about the extreme volatility. And if you get stopped out, you get stopped out. Not protecting yourself could be catastrophic. Right? And that's just the inherent dangers of a market like this. But in a macro sense, please understand, this thing's been bullish. You could say down here, but we finally got our signal on the week of January 20th. And we still are at the beginning of April, essentially. Nothing has changed in trend. Price has been all over the place, but the trend has still been up. Where you take your profits are up to you. But you can't tell me that you don't know what the trend is. It's as simple or as complicated as that. And we just want to trade everything in between these. We want to trade. Here's our safe entry. We're going to ride this up until it looks like price wants to roll over. The weekly chart, quite honestly, doesn't look like that yet. You don't get much more bullish than that, and I don't think it's roll over tomorrow. There's just too much uncertainty. And all of these markets are going to look somewhat similar. If we look at NASDAQ, same thing. There's the weekly. What's the challenge? The 50. Look at today, or this candle rather. Wicked the 50. Pulled back. It's interesting that it didn't take a shot at the 5 EMA in that candle, but nevertheless, it just wicked the 50, pulled back. Obviously has to start pushing these other levels. But again, there's our trend line from the daily. We've seen, just like on Bitcoin's weekly chart, just remember this kind of setup here. It looks something like move down, right? So we're not out of the woods. We're not out of the woods on anything yet, unfortunately. Right? This is still going to be a grind. Now let's look at some stocks for a second with some big charts. Let's look at Apple, because Apple looked like death for a little bit. But that said, has it broken trend on this weekly chart? No, not yet. Right? Not yet. There's the T line. It's struggling with the T line right in here. And it's really struggling to show that it has relative strength. It's not quite there yet. And are we trading in this kind of gray, skinny volume? Yeah. And that's a slippery slope in there, right? You can shoot up and down real quick. You get a bid to the upside, you're going to want to challenge the 20, obviously. You break down, you're going to come back and revisit the 50. Break down in this slippery gray light trading, break that value level, and then you're into that gap again, and there's the 200. It is not to think that price just doesn't come back to the 200 on the weekly, or it does it just periodically, is not how it's always been. Right? It's normal for price to come back to the 200, but we have such massive ranges that it sometimes feels like it's taking a while. So does the 20 look like it's a legitimate level of resistance? Sure. It sure does. So nice support from the 200, right? You have to acknowledge that. Do you have a buy signal yet on Apple? No, not yet. Let's look at the 4 hour. And what's the 4 hour going to struggle with? It's going to struggle with the 50. So let's talk tomorrow and right when we're challenging the 50 to see what happens there. Again, this is still, is that a lower high? Yeah. Is that a lower high? Yeah. Is that a lower high? Yeah. Is this turning out to be a lower high? It looks that way. So this is why it's, and I don't know, maybe it's my old age, right? I'm trying to caution people, let's not get too excited before we actually know what we're dealing with. Like, we do not live in normal times right now, and things can reverse just as quickly with a bearish engulfing candle on this monster. That's the world we live in. But we just follow charts, and the rules that we apply during normal times on any asset, on any time frame, are the same rules we apply now. They do not change. The only thing that has is that those ranges that we trade within have been pushed up, spreading everything out. So this is just a support and resistance situation, and we're going to have eventually, we're going to work our way probably into a wedge of some sort and deal with that. So again, holding the 50, this is a little bit like purgatory in here really until it sorts itself out. Break the 20, well, you're probably going to go on and make new highs. Fail the 50, and that puts the 200 in play. So let's look at NVIDIA. A little support from the 50. All of this, light trading. This volume gap is exponentially dangerous when you're dealing with this light gray trading up here. Dangerous if you fall into it, and then the same effect if you push up into it. So is this indicating a change in trend? Well, not really, right? What did we do today? Well, we basically closed a little bit below the 5 EMA on the weekly. We have to get north of this level and start trading in a meaningful way under a buy signal with relative strength before you consider it a real move. Trading move, yes, but a real trend move, we're not sure yet. And we live in a world where we could turn around tomorrow and all of this come crumbling down on top of us, right? We just don't know. There's Exxon, just to kind of parallel what you might be seeing on some of the oil charts. It's a pretty bullish chart, right? These two weekly red candles in here, all they did was come back to the 5 EMA, get support, and boom, take off, and then you take out the previous wave's high. This week's candle is a little lofty, right? This is the horse getting a bit far away from the barn again, so you expect price to kind of come back and tag it, and sometimes it tags it like it did here and carries on, and other times it breaks down a little bit and it will find the 20. Whether it holds or not, if it does, you bounce, then it puts these highs back in play. If you break down, it puts the 50 in play, and this is a lot of past price, right? Current price will look for past. So if this changes trend, rolls over, you're going to start looking for levels, and price will be looking for places it's been before. And the longer the time frame, the stronger it is as a draw for price. Make sense? But you have to like this, get a nice buy signal. The relative strength came in really when the wheels fell off of everything else. But nice chart, right? Just take off the candles for a moment. Does that look pretty? I heard somebody exhale just by looking at that. Right? So, that's not hard to look at. Volatility aside, you have to just take the noise out, get a good look at the trend. Trading on the north side of the T-line and the 5 EMA, yes, then you can stay in the trade. Do we go short when price is doing this? No, we don't. Just like we don't go long in here, right? Because you're in a trend move. Just let it do its thing. Let's look at XRP. And a lot of these things had big moves today. This is the weekly chart. Have we had a change in trend? No. These are really hard to look at if you're long, right? Really hard to look at if you're a long investor. It's even harder. And I can appreciate why it feels that way. As long as price is trading below these levels, use your weekly as a benchmark. Stay short. Do you remember what we talked about identifying these areas back in here? That's what we were doing. Did we find them? Well, we found this one. Shorten up our time frame. We'll see why. These we can show you this on Bitcoin going back into 2021, right? Where price did this around 30,000 on its way up, and when it rolled over, where did it come back to? That same level. And then use that $30,000 as a bit of that level as a bit of a magnet. You can, from there, it hit it several times. And there's another one. We're not, these are not far off levels. In fact, we've already dipped into it a little bit. But these are the things that don't sound plausible to people when price is trading above all support, right? Those things sound impossible, but they're not impossible. Why do we use fractals? So that you can see what's going on that longer time frame, so that you don't go mad trying to figure out what's going on intraday or daily. Big moves in price, yes, but trend change? No. Right? Just no. Hard no. Let's look at Zcash, because Zcash really got a bid. Right at the 50. And if it's going to get a bid anywhere, it's going to get it there. Right? Like these are you've heard me say before, I'll wake up in the night for green candles at the 50. And this is a nice one. Don't have a buy signal yet, but we certainly have, a nice green candle. Is this just going to be a retracement higher before you come back and challenge the 50 again? I don't know. It looks like the 20 has something to say about it, doesn't it? But for now, that's support from the 50. I still believe that there's more downside here, but nothing goes straight up or nothing goes straight down. But it's great to see the support from the 50. It's doing exactly what it should do, or you hope it does, or kind of what we communicate all the time. So that's a nice hold. Right? So when we talk in our analysis that, we hope we come back to the 50 and get some support, that would be exactly what we're talking about. Exactly. Let's look at Monero, because, Monero was the greatest thing, was probably the hottest coin going until it wasn't, right? And, these are just ugly candles in anyone's world. And right now, this is still a very bearish chart. So you've essentially we've given all of this away, broken the 50 on a weekly, and when we do that, it puts the 200 in play. And how does that affect, if I'm sitting here with a pot full of money and I have to figure out what I do with it, and I really, 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 really want to own this thing? Am I buying the dip? at this point? I'm not. This could be a 4-hour chart. Wouldn't matter to me. I'm not buying this chart. This is still a bearish chart. What do we talk about every week about the T-line and the 5 EMA as it approaches major moving averages? If it's open like this and diverge down and to the right, working under an active sell signal, chances are it's not going to hold. Let me just get rid of this. Blow this up a bit. I don't know if you can see it. You can actually see that it's diverged there, and there's your next candle. So as this candle's forming, you're going to see that this divergence is down and to the right, and you're printing a sell signal. You break down. You're still open, still trending down. This is that impulse down and sideways movement that doesn't break trend. You usually wick like you do here, and then you fail. That's what we did. Still open this stuff as you approach the 50 and price is broken through. So this is one of the simplest and strongest trend indicators I've ever tripped over. It's so easy to use. Like dead ass simple. And there's so much that it tells you. This for me is huge. Because again, we don't know what comes after every candle, right? As all we see is we've kind of crossed over and we're starting to diverge down. In this case, we would have seen our relative strength waning as well, so that would have got our attention. And then boom, price breaks down. This is that sideways movement. Nothing happens. So this is still very bearish. And it also puts the 200 MA in play. So all of this through, this is the point of control, all of this through here is what the point of control is picking up. And that past price, if money doesn't come in or support's not found, is the bench that price will sit on to rest. Whether, again, it's a 5-minute, 15-minute, or a weekly chart. It doesn't change. The analysis doesn't change. Here's our Solana chart. See all that divergence? You cannot fight the trend. When you're looking at your chart and price is falling like this, yes, you can say hey, it's obvious that price is falling, so yeah, I guess that's a downtrend. But you don't have a simple mechanism that you can use to show you exactly how much momentum is there and how strong the actual trend is and how to interpret this price action. This will look very different when we put our script on. Right? These wicks that can't break and close above the T-line or wick it and pull back, and price actually trades below these levels consistently. That gives you an entirely new ability to read price on a chart. When you combine it with producing buy and sell signals on that time frame and with the support of relative strength, this is exactly what we talk about. Sell signal, printing, and then you drop through zero on the Z-score dashboard. Those are usually strong signals, and this one proved out to be just that. Has anything changed on the daily? No. Still a bearish chart. There's your sell signal. This is very, very condensed in here, so this is accumulation of sorts, so at least looks like it. I don't trust this at all, to be honest. For me, trading below levels is a little bit of a tell, right? And these two green candles on Solana that wick the T-line and pull back and close below the 5, that to me that's just stinky. There's something I don't like about it. And I wouldn't be going long here yet. That's just me, right? Not financial advice. I don't like that you're actually losing relative strength as that's taking place. If this had some spank, like we'd be pushing up into this volume gap, right? But it's just not there. Still, I'm not sold on this yet. But again, that's just me. That doesn't mean it's not going to happen, but it's just how I see it at this point in time. It's not meant to scare anybody, but I just have a hard time seeing past some of the indecision, I'll call it. BNB, here we go. Oh my gosh, it's almost the same chart. Almost the same chart. You got to deal with the 50, you have to deal with the 200. And it's difficult for price to trade higher in a meaningful way without relative strength. This is kind of divergence, isn't it? You have relative strength that you're waning, price is moving higher. See what happens when we get to the 50. When we look at the daily, we can see the struggle, right? Obviously came back to this level that we had dropped on here. So we were right about that. And only right about it simply because we were able to identify where price has been before. Because we knew that current price in the event of a downtrend, see, there's nothing in here to hold price up. Let's throw some longer term. Well. Okay. Why do we use these longer term averages? This is why. So although like we know that price was just, this is a downtrend. We're not going to argue with what you see here, right? This is pretty clear. What's also clear is where, you remember the shoulders that we just showed on the chart a few minutes ago on the XRP chart? This is an example, right? That was a weekly, this is a daily. This is just, believe it or not, price will be attracted to this at some point. But it chatters here along the 500-day. Loses it, comes back to 1,000 days on the daily chart. Which means on the weekly chart, we probably would be close to the 200, which is not showing because there's not enough time. But typically, the 1,000-day on your weekly will be the 200-day on your weekly. And that's probably what we're seeing somewhere in here. But this is the level that we dropped on simply because why? This is the ruler that you can slip between levels of support and resistance. Like right through here. And price respects these levels because it's drawn to them. Nothing complicated. Here's ETH's weekly. Broke the 200. Now we got to do that dance again to get above it. But this is incredibly nasty looking, right? So as everybody got excited here, they got ultimately disappointed. I think you have to check yourself until you really know what's going on. Because this is some really crazy price action. Really crazy. Daily resistance, there's the 20. We know what happens, right? If we break the 50 and we break the 20 and start pushing, we get into this volume gap, and hey, there's your 1,000-day moving average that you would have to test all over again. And if I was to invert this chart, this would look like resistance. And when I say invert, just flip it over. But we know if this was if price was falling and this was inverted, it would be hitting it, right? Be supportive. There's a big test to go here. A big one. And you got your 200 and the 500 all up there. That's a lot of price history to deal with. And the fact that you broke it all as quickly as you did, you have to ask, how much does it have in the tank to bust through here and bring you back up to those $4,000 levels again? Right? That's going to be a challenge. Everybody's favorite is Aster. That's just gone absolutely flat. If we go to our 4-hour chart, you can still see, like, this is just absolutely nowhere. And this one looked like it had promise, and I think we talked about, here you are at the 200 wick and turn away and run. And that's exactly what it did. Looks like it wants to make another attempt in here, but even that looks tough. I'm surprised this thing hasn't found a gear yet, but when it does, I'm interested to see how, like, here you are with the 20 and the 50. Something's going to happen here. You're just going to want to be around when it does. But don't think you're going to be too late. If it's a trend move, you're going to be able to wait and come back and get a good entry. If we use Bitcoin as an example, here's a move that took off, right? Up in here, where do you find entries? At the T line or 5 EMA. When price comes back, see, there's a great example. So you have the impulse up. This is the green up version. Price goes up and then sideways, comes back to the T line, 5 EMA, boom, moves higher. Boom. Now we're sideways again. Sideways, hits these levels, moves higher. When it does this and holds, that's bullish, right? So you're looking at this, at price move up like this with that kind of momentum higher, and it just comes back to the T line and continues to hold. That's bullishness, right? Now you're back to more of an MA support, and it's good until right back in here. We always talk about when you break one level, you'll find the next level. So this, you're trading above all your major moving averages, all of your support, everything that you can think of. And then all of a sudden you break a level. Well, as soon as you break a level, you put the next one in play and you find the next level. There's the example of that being open as you approach a major moving average, right? Price breaks down. And the same applies to the upside. Flush candle, 2 equal tops, and then it starts to fade. That's kind of dangerous, right? So if you were to even wait for this candle to close, the next candle, work where it opens, right at or just a little bit below the previous candle. And that's not necessarily bullish, is it? So we've got lots to deal with here. And I know everyone wants to get cited. It's great to see oil come down a little bit. It's, gas is expensive. I get it. Right? We all understand that kind of pain, but let's be honest about what the chart is telling us. And the chart is telling us that oil is still very bullish. On the daily, come right back to the 20, bounce. What happens? Take out the previous wave's highs. Right, got a little ahead of our skis. It just came back, tagged the 5 EMA, and if the beat goes on, well, you're going to start working those other highs again. So this is the kind of fun with Dick and Jane version, and I'd hate to come back on Thursday and look at Bitcoin, for example, and see it reverse. Like, that would just be it would be a shame, and also exactly what we would expect in some ways, isn't it? There's a reason that these levels are here. I have to find the other chart. There we go. So I dropped these on last night when I was just doing a little late night work, and I want to show, again, it's not pin the tail on the donkey, but I am just looking for areas where I can get some consistency in candle tops and bottoms, where I can line something up and just run it across my chart. We do this all the time. And I've also done this back down here. And this was actually what I was referring to earlier, where going back into 2021, see this shoulder in here? So those of you that knew me back in here would have known that as everybody was talking about some pretty massive numbers, we're just reading price on a chart. And when it rolled over, we told you that you were probably going to come back to that $30,000 range. Why? Because of this in here. Current price would look for past price. Now, I can recall I wasn't very popular until a few weeks later when it did exactly that. But there was no magic. It was just toppy, break one level, find the next level. This was past price, right? Oh, but okay, that was crazy. We're never going to see that level again. Price goes on, bounces, takes out the previous high, right, on the weekly. And then, oh my Lord, we found it again. So don't think that it's not possible or it can't happen again, because it can. So trade what's in front of you, try and mitigate the risk, and understand that these levels mean something. So do you remember when we had, I think it was MicroStrategy or strategy, whatever they call it, started to roll over? What did we do? We circled a bench like this, didn't we? Which seemed idiotic at the time, but when price pulled back and broke all levels and couldn't find support, and it's just like the Roadrunner and Wile E. Coyote, right, falls over the cliff, that's the branch hanging out of the mountain that you catch your pants on, right? But it's that draw. That's what you're hoping at the very least you can get held up on. And on the weekly chart, it's not ironic that it's the 200-day moving average. But I think if you break this, it's a real slippery slope. And I hate to say it, but it can actually put those lower levels in play once again. Will that happen? We don't know. Right? Nobody knows for sure. But it's if this, then this, right? If break this, find this. If break that, find that. Right? First attempts and all that stuff. But the trend is still down, at least for now. At least for now. Now, what did I want to show? Let's look at the Qs real quick, and then silver and gold. So here we are using the 50-day MA now as resistance. And let's remember what we talked about just now. This being open, basically at an MA like this, is an indication that it's going to be difficult for price to hold. Now this is a weekly chart. This could take 2 candles to establish this, maybe even 3. If it goes sideways, more. But focus on this divergence apart, right? You're working under a sell signal, open down to the right. This is an indication to me that it's going to be difficult for price to hold. Gold's weekly chart. Now, you're dealing with a nice green candle. You got 2 of them really. But you haven't broken the 20 or closed above it. And you still have to deal with the T line and the 5 EMA. Right? We just haven't been able to do it yet. Now, if this is, a little bit of a retracement, you bounce up and you break here, produce a buy signal, you still have relative strength and lots of it, you could bounce and take out that high, as crazy as that sounds. But it's crazy, not crazy, all at the same time. Let's look at silver. Probably, I was going to say a similar looking chart. These simply could be those, 2, 3 green candles that you see in what ultimately turns out to be a downtrend. I think the concerning thing here is, see the T line? and the 5 EMA breaking through the 20. Let's just kind of make a mental note to come back here next week and see what this looks like, or if this candle holds and doesn't pull back, because this is typically indicative of something that might want to break further. And these are all the little cues that using fibs and fractals and filters can give us, right? They give us areas where price has been and has not been, or will be drawn to. It'll show us areas where where it may want to go. Trend is important. If you're on the right side of the trade, well, half your problems are already solved. It's like, your house is sold if it's half sold if it's priced right. This is no different. If you're on the right side of the trade, you're going to be far better off as you work your way through it. Under a buy signal, trading on the north side of the T line, stay long. Don't worry about the red candles in uptrends. That's just the ebb and flow of price. And it's really, really hard in markets like this, I understand, to stay focused and stay attentive and not be reactive and not to overthink too much, because it's easy to do. And we all do it, right? We all do it. The only thing I do to save myself from going mental is to focus on the longer time frames and then break them down fractally into smaller pieces, with the understanding that the longer time frame is kind of the overarching trend, and then what we're seeing on dailies and 4 hours, like here we are trying for price to go up, but we certainly know on the weekly chart, on the weekly chart, that we have levels to deal with, right? The 50 to deal with, these weekly T line to deal with. So let me ask something. If you break through the 50, here's your 20. Your 20 is already south of the weekly T line. We know that first attempts typically fail. So if price was to make it up to the 20 and fail, basically you're failing the weekly T line, which would be probably bearish, right? Like, you really want to be breaking this level for it to be meaningful. And I like to use the T line. I know some people like to use weekly highs and lows, which is also great. I like to know where they are as well. But I find the T line is very tradable, understanding where they are. If we just were to take a moment and then drop on the 4 hour T line, just for fun, we can really see what we're dealing with a bit better. So this is, if price was to pull back and fall below that 4 hour T line, you'd have a problem, right? Yeah, probably. If you're to break the weekly T line, that's a good thing. So what I'm doing on a lot of charts is just identifying the weekly T line, going back to the daily, and then going to the 4 hour. That forms a range. And because everything is fractal, it doesn't matter what time frame I'm on. I have the ability to trade within those T line ranges. So here I'm on a 15-minute Bitcoin chart. That's the weekly T line, 4 hour, daily. There's the 1000 MA on the 15-minute chart. This is why we use the long-term averages, because we understand that they're fractal and price will still behave just as we show on every other example. So here you have 1000 MA on a 15-minute chart. It gets wicked, pulls right back. You don't have a sell signal yet at a major moving average, but if you're to break here, it puts that daily T line back in play again. And here's the 50. So if we break one level on this 15-minute chart and the next level below us is the 50, kind of tucked in here with the 200, but if that's the case, well, that puts us below our 4-hour T line again. So you can see real easy how you can use this fractally, right? And again, use your relative strength. There's not a lot of relative strength here, so it's very difficult for price to move up in a meaningful way. This is a real interesting touch and fail, or certainly pullback anyway. So if this doesn't hold, it puts this in play, which brings you beneath that 4-hour T line all over again. And that's kind of how I'm framing things up, using the T lines on the things I want to trade, and using those longer term averages also to help me frame things in. All right, so that'll be it for today. I want to thank you for joining us. Feel free to like and subscribe on YouTube, obviously, and you'll notice in our description there's a list of all the non-KYC geo-friendly exchanges that you can try out. And I can honestly say I've probably been on them all, and the people in our group are as well. So they get well used and come recommended. So if you can, feel free to try those out. And until Thursday, we will talk to you soon.